Hello and good afternoon to Madam Sharifah. For today's video, we're going to present on an overview of internal audit. My name is Sharifah Afrina and my group members are Chua, Farah, Shafira, Kalisha and Shalwa. Internal audit is an appraisal activity established within an entity which requires continuous and critical review of financial and operating activities. The expectation from having an internal audit are it will improve the effectiveness of management, improvements on managing risk, and controlling and monitoring the process of governance. And from that, it will fulfill three main functions, which are effectiveness, efficiency, and economy. Okay, next we're going to look at IPPF, which stands for International Professional Practices Framework. Just like an external auditor, internal auditors also requires an authoritative guidance promulgated by the Institute of Internal Auditors. IPPF is divided by three components, which are recommended guidance, mandatory guidance, and the mission. So the general task of an internal auditor is to safeguard the assets, assess the efficiency of risk management, evaluate and recommend on improving the internal control, and to ensure the company is complied with the rules and regulations.
Why internal audit is necessary for listed firms? Internal audit monitored and assured in keeping the listed company complies with the framework and regulation provided by the law. The reason is it's provide objective insight. The internal cannot have any operational responsibility. It has to provide unbiased view of the company. Second, it's improve the efficiency of operation. Can receive assurance that the company are in the right path according to the policies and procedure. It's also identify the recommendation to improve the efficiency and effectiveness by continuously monitoring and review the process. Third, it's evaluate risk and protect asset. Internal audit program assists management and stakeholders by identifying and prioritizing risk through a systematic risk assessment. Risk assessment can help to identify any gaps in the environment. Fourth is assess control. It's improve the control environment of the organization by assessing efficiency and operating effectiveness. It's also ensures that compliance with laws and regulations. By regularly performing an internal audit, the firms are assured with the compliance of the law and regulation. Next, the objective of the internal audit. It's establish the areas of the risk in the area being audited. It's also establish the control in place to address those risks and review their adequacy. Third is check whether the firm's financial regulations are followed. Fourth is carry out detailed testing of the controls being relied on. Lastly, make recommendation on the weakness and or efficiency.
For the scope of internal audit, the first scope is monitoring of internal control, which demand proper attention on a continuous basis. The second one is determine how to manage risk phase. For example, by reviewing and evaluating the soundness, adequacy, and application of various control. The third one is reviewing the economy, efficiency, and effectiveness of operation. For example, by determining the extent to which the established plan, policies, and procedures are being adhered. The last one is reviewing the compliance with external and internal requirements. For example, external requirements are imposed by law and internal requirements are issued by the management of the organization. For the role and responsibility of internal audit, the first one is conduct timely implementation of risk-based internal audit as directed by controller complying with annual plan. The second one is assist on various audit projects and matters. It also ensures to have initial focus on revenue assurance. The third one is conduct risk evaluation of assigned functional area or department in established time frame. The fourth one is implement internal audit tasks in areas of risk management and internal control. The last one is perform all assigned audit assignment at finance, operation, and administrative process and system.
What happens if there is no internal audit in a big organizations? So as what we have learned before, auditing, or the other name of it, which is assurance engagement, is an objective examination of evidence to provide an independent assessment of risk management. As mentioned by the other presenter, internal audit is very important to ensure the effectiveness of internal control and also the corporate governance of a company. So assurance engagement involves the following phases, which is the establishment and communication of a scope and objective, the developing the understanding of the business area, describe and understand the key risks of the business, identify the control and monitoring procedure for each key risk and transaction type, development and educations of risk, report any problems and action plan with the management, follow up and report the problem and actions by the internal audit department. So as a conclusion to the phases just now, internal auditing is made to ensure the effectiveness and efficiency of operations of the business itself, to ensure that the company is compliant with the laws, regulations, policies and procedures, to ensure the operational objective is achieved and any information by the company is reliable to the shareholder, to the investor and also creditors. And the last one is to safeguard the asset. The question here is what happens if there is no internal audit, or the internal audit is being ignored by the organizations. Obviously, there will be no effectiveness and efficiency of the 5 things that I mentioned just now. And the other effect is to external auditors. As we know, external auditors relying on the work of the internal auditors, right? So it is the nature of external auditor to gain assist from internal auditors to make an audit opinion. So without internal auditors, the external auditors will have to do all the procedures such as monitoring internal control, reviewing and evaluating of various control and many more that should be done by the internal control. So it is very difficult for an external auditor to review the activities of the company for the whole year. Hence, it will take a long time for them to complete auditing a year record of the company. The second effect, if there is no internal control, organizations without an internal audit functions are missing a key element of good corporate governance. They often lack a complete and objective understanding of the effectiveness of their risk management processes, internal control and governance, as well as their assessment and improvements. Supervisory and executive board in turn do not have independent and expert insight and lose opportunities for organizational improvements. Next, lack of internal control. When there is no internal audit, it shows that the company probably lack of internal control. The less effective of internal control, the higher risk factor that could be assigned to control risk. This risk is influenced by the attitude of the management and director that failed to prevent or detect a misstatement in a financial statement. This can lead to financial statement by the company and indirectly can lead to the frauds, which when a public traded company does not have an internal audit functions, one must ask, who is providing the board with independent and objective assurance and insight on how well risk and the mitigating controls are being managed? If it's only management, the board may be operating at a disadvantage. And the last one is unreliable information. If limited resources result in incomplete rush or shallow audits by the external auditors, the finding will likely to be inaccurate. Getting to the root cause of breakdowns in risk management and internal control often requires site visits, deep data analysis, and repeating source interviews, and external auditors won't be able to dedicate the time and money for such thorough and necessary undertaking.
Operational audit, or also known as performance audit and management audit, is an audit performed by an internal auditor. A type of audit which refers to the assessment of an operation of a branch, a department, or an organization. The appointed auditor will assess the report of a branch to determine whether the branch is operating efficiently and effectively. The operation may be a process or an activity, including the audit of inventory system or financial management. The branch is considered efficient when they can carry out the work with minimum cost, and it is considered efficient when the department is able to produce required results according to the company. There are three types of operational audit, which are functional audit, organizational audit, and special assignment. Functional audit is an audit based on function, such as filing function, recruitment function, and engineering function. Organizational audit deal with an entire organization or department. It emphasizes interaction among departments. For example, checking whether there is a redundant of work in the department. Special assignment audit based on requests by the management, for example, to look at IT-related problem and when there is a possibility of fraud in cash receipt. The primary objective of operational audit is to assess the quality of the operations, whether in line with the company prescribed policies and plan, to identify the areas of improvement, and to provide recommendations. Internal audit can fail when the internal auditor audit risks that does not matter to the board of directors and the top executive. This happens when auditor continues to audit risks to processes and business unit rather than risks to the achievement of the company objective, thus will remain as a stop function that costs money rather than deliver critical value. The solution to this problem is the internal auditor must audit what really matters to the board and the management. Second, they communicate what the internal auditor wants to say rather than what the management and the board need to know. The solution is the internal auditor must deliver the information the leader needs when they need it in an easy to consume and actionable form. There should be more talking and less writing. Third is failure to attain and retain the confidence of management. The recommended by the internal auditor are sometimes not acted promptly by the managers. This is because they don't trust the internal auditor. So the solution is the auditor must actively listen and understand management's perspective to make sure that their corrective action makes business sense to persuade the managers.
Compliance audit. Compliance audit basically refers to a contract or an agreement in which parties concerned must comply with all terms, which are requirements, rules, standards, governance, regulations, transparency, policies, and law. Compliance audit focuses on the procedures used by a branch or department in order for them to safeguard the assets of the company. Not only that, compliance audit attests to the fairness of the information versus given standard. For example, financial statement attests its fairness with GAAP, which is generally accepted accounting principle, in order for them to ensure the financial reporting is reliable. In compliance auditing, the responsibility of the auditor is to identify the element of audit, assess whether a subject matter is compliant with the established criteria, and issue a compliance audit report. Human error is unavoidable. It is because employees are not trained well and misunderstand the reasoning behind rules and regulation. Failing to comply with its guidance exposes the organization to a greater risk. The solution for the organization is they can perform regular audit on the employee to ensure they follow the procedures and are ready for auditor question. Next, the failure in compliance audit also due to the lack of supplier control. All the best guidelines and processes won't be enough to keep the organization compliant if they are out of sync with their suppliers. So the way out for the organization is the audit assessment must conducted in partnership with the management and tackle the issue with supplier scorecarding in order to gain a clear picture on how supplier perform against the business requirement. Besides, due to the lack of documentation. So this is because new or revised audit standards are becoming increasingly rigorous regarding the emphasis on specific documentation. This is why nowadays auditor mostly facing with documentation failure. So, the company should document what they are doing in written policies to ensure everyone is trained in proper procedures and creates a, a paper trail of the performance of controls. As a conclusion, the evaluation on this business process and the strategy are to identify and analyze risks and as the controls is understood. Also, internal audit ensure the company is functioning in the most efficient manner and internal control are adequate. So that's all from us. Thank you.